Good morning, everyone, and happy Aloha Friday. And I hope everybody has a great upcoming weekend. Unfortunately, the stock market didn't have a great day on Thursday. However, when we look at most of the indexes, the New York Stock Exchange, you can see that while it did pull back 0.57%, it bounced off the lows intraday, and volume was lower than the day before, thus avoiding a distribution day. So overall, normal pullback. S&P 500 down 0.37%. Overall, normal pullback on the daily. The Dow Jones Industrial Average only fell 0.15%, volume much lower, much below average on the pullback. And on the Russell 2000, even though you can't see it here, down 0.43%, but volume was also lower. However, the move intraday was pretty gnarly as the sell-off began at 2. We got some great support at 3 o'clock, started rally again and sell off, but we got the exact same kind of like support level like right before 4 o'clock and bounced off those lows. However, that kind of action obviously did get some people skittish, and whenever we look on here, we can see volume was higher than the session before, and overall, we were only down 0.12%. So it's not a technical distribution day, right? Correct. However, since we opened at 34.08, rallied up to 34.28, backed all the way off, not all the way, it's not like it was a huge percentage gain anyway, but backed off and closed right near where we open, about 20 cents, 25 cents away, whatever. Overall, it's just it's not a very positive action, and it is what we would call churning. However, you never know if it's churning until after the fact. To say that it's definitely churning would be damn right foolish. It's churning if, following today, we get some more distribution days, possibly more churn days like today, and then begin to sell off. However, if we sell off for a day or two, and then rally to new highs, the churn day is done. As of right now, though, it is churning. And whenever you look at some stocks out there that broke, like CHCI looks like it's about to break down, but that's kind of, a crappy stock. BWEN, this is where it starts to like, even though that they're small, all these patterns are very telling because they're either making a very nice consolidation pattern before failing a basing, you're failing the base below the 50-day moving average, and or they've already broken out and reversing. NTWK, once again, another base failure. APP, a base failure. WG, base failure. Actually, kind of a breakout then failure. ARII, you can see that it failed a base back in March and continues to lower. DGI today, look at that. It can't fail that base, can it? It looks like it can, especially on a 3-day chart when you add that up. That doesn't look too good. SNSS, another base failure. ERII, another base failure. CTB, another base failure. And you're starting to get the point whenever you look at all of these charts. You can kind of see the exact same pattern, and it isn't really, anything really that you want to see in an uptrending market here. I mean, there's just a lot of stocks that obviously are breaking down as you see me go through this list right now. And this is not something that you would think that you would see if the market was really, really strong. And as you can see, we're looking at New York Stock Exchange stocks and NASDAQ stocks along the way. So it's just something to go ahead and keep in mind, as we go about out there. Now, the one good news about today, despite all those ugly charts I just showed you, is that we only had one sell. CONE is an official dud. We held this thing for right around a little over a month and we got nothing out of it. And what sucks is that on my part, so this is learning from mistakes. It's really not a mistake because you wouldn't know. So it closes below the 20-day moving average here again. Why don't I sell 25% here again like I sold 25% there? Because it's above the support lows of that 20-day moving average break. So then the next day it's down again. Why don't I sell there? It's the second day below 20-day moving average because once again we're above those lows at 23.71. So then the next day we reverse and close at 23.65. 23.65 is below 23.67. Why did I not take 25%, profits here? Because there's a pretty big intraday reversal, and whenever I look at the long chart pattern and I look at these intraday reversals in April, I'm pretty sure that we're going to find support here. Whoops, looks like I was wrong. So now we're going to get fully out. We have taken some partial sell signals along the way. So even though that this is a negative 0.44% return, overall we're leaving with a flat position. But kind of sucks to the stock that was looking this good following its IPO with a nice tight pattern turned into that. But still, that's our only sell. The only other ones that came close, GNMK, but the intraday reversal, I'm going to go ahead and hold on to it. And then what was the other one? It wasn't INSM. So I'm confusing myself. Well, GNMK, Cone. Here, I can do this really quick. Stocks and long. Go back over here. Do this. Do that. Go like this. GNMK. Chewy. So here's USCR. That's it. So USCR also is pulling back, but on lower volume. And on a function F4 with it bringing below that lower base, you might want to be able to sell 25% here if you want to use the 10-day moving average. However, with the lower volume and being right at the 20-day moving average, I'm going to go ahead and not sell any. I've built up a little bit of a position here, so I hope it works. If it doesn't work, I'm going to regret it later, but that's just some possible partial sell that you could be taking. No new longs, no new shorts. The only two possible longs, Netflix, as you'll see here, pocket pivot point buy signal, heavy volume surge, but BOP went the wrong way. And also, whenever we look at this chart right here, we can see that it's not closing near or at the high of the day. Volume surge wasn't huge coming out of this, and overall, we're still below the highs post gap up. So, not that greatly into the stock despite the nice little fundamentals that it has going here. MDCO is what I'm going to show next, but Netflix, as you can see here, look at the earnings and sales growth lately, starting to turn around and excellent estimates. But once again, look at this daily chart, and it's just not a breakout I want to get. It just doesn't look like that move here is from a long enough base, so I'm going to pass. And the next stock is MDCO. MDCO, look at this long ascending wedging. Look at the breakout, pullback, breakout, pullback. So why shouldn't this one break out and pull back? Well, the only difference is that this time it's coming with some strong volume, and you can see that there's a BOP surge. But unless BOP would have surged to near max green there, with the relative strength line not hitting new highs, with price hitting new highs, and volume, while being very, very strong, not being necessarily huge, we need I would have seen BOP explode more with this kind of volume surge and price surge. But, it's probably what I'm going to regret because, MDCO, look at these numbers down here. That's some huge earnings per share growth. And look at the consistent growing sales growth. And the estimates for 2014, strong, solid mutual fund growth. So overall, this looks like one that I'm going to probably regret. But whatever. It's okay. I want everything to be perfect. All right. Happy Aloha Friday, everyone. And have a great upcoming weekend.